Welcome to The Nest Show, the podcast that brings you insights into the crypto market, trading and investment experiences, and what we're looking forward to as we navigate the space together. Today, we bring you an unprecedented breakdown of the Bitcoin chart, powered by none other than Crypto Birb himself. This show will provide you deep insights into how Birb rationalizes chart dynamics to put forth proven Bitcoin projections time and time again. He's joined by our esteemed guest and crypto OG SoCal, and comparing and contrasting traditional charting elements. Later on, Sponge draws out still deeper methodologies that can and should be used in any charting practice. You will not want to miss today's deep dive to demystify TA in this episode of The Nest Show. Once again, thank you for joining us, and we hope you enjoy the ride. What The Nest Show is. This is a podcast brought to you by the Birb Nest community, an independent crypto-centered trading community built to sharpen each other in capturing opportunities in the markets while protecting capital along the way. What this is not: trading advice. We are not financial advisors, and you should not regard any information here or in the Nest Club as financial advice. You should always consult a licensed financial advisor before making any financial decisions. SoCal is joining us for the first time, and SoCal, thank you so much. He got into crypto at the end of 2013, although he didn't join crypto Twitter for another couple months or so. SoCal helped pioneer spec mining along with others like Not So Fast, and continues to mine and trade BTC and altcoins today, along with being a founding member of CoinHQ. SoCal, thank you so much for being here.
Hey, thanks for having me on, guys. Appreciate it.
And our special guest, Crypto Birb. Adrian, how are you, brother?
Yeah, I'm very good, thanks. That's great to be here again.
Right on. Well, listen, we're just going to go ahead and jump right into it because, Adrian, I know that you have the chart pulled up for Bitcoin, but in this episode, we're going to be discussing some kind of in-depth technical analysis for the Bitcoin chart and possibly others. But so that our listeners can join us on visuals as well, we do have visual aids and screen shares pulled up. So please feel free to check us out on any visual medium that you're joining us in. You have that Bitcoin chart pulled up. What are we looking at?
Yeah, sure. So first off, this is a long-term chart, logarithmic chart involving the entire price history of Bitcoin. And to be specific, the Bitcoin liquidity index, right? The Brave New Count BNC. Liquidity index for Bitcoin, and the whole point of today's discussion, I think, is the question that everybody is interesting and even more interesting when Bitcoin keeps pumping like crazy. Will Bitcoin grow to all-time highs? Right. This is probably the one of the most burning questions that only future knows the answer to. And I would definitely like to bring a few closer points and looks here and there throughout the Bitcoin's history and potential ways to spot where we could be within the Bitcoin market cycle right now, and what potential conclusions we can draw from that. And that would be awesome to go right away and just give a deep dive into the Bitcoin history. What I would like you definitely to start and then just notice is that what is very visible, I say, in this very chart is that we can see some repetitive formulas, right? We can see some repetitive peaks that just come up and then simply after are followed by some downtrends. And this is the very nature of every living element around us, or not even the living, right? For the way that we perceive, because a stone, like I'm just going like a side digression about it, but this corresponds very well with every matter that we'll be discussing within the technical analysis. If you think about it, every piece of like around us, every piece of the universe consists of matter. It consists of particles. It consists of chemical compounds. It consists of protons, neutrons, electrons going subatomic, or quarks, right? Or we just go even deeper and deeper and deeper, etc. The whole point of that is that every tiniest element of the matter is always living for the dynamics that it's being surrounded with. And all the different forces and energy flow that is just that being present in the universe makes every element of matter oscillate Every movement is just simply comes from the forces. And when there is a force, like just go in and watch the second law of dynamics by Newton. When there is a force given, there is a motion also. And vice versa. When there is a motion, it means that there had to be some force to move it. And for all that, every living part, every part that surrounds us that consists of matter is moving and oscillating. It's just moving constant vibrations. And vibrations are nothing less than just sine curves or cosine curves, right, on a logarithmic chart. Or like in this logarithmic chart, you can see that pretty well for all the fluctuations, for all the oscillations, right? What is an oscillation, though? And we need to understand that pretty well. Oscillation is a type of movement that just follows the same periodically. It just follows the very same path, right? So if there is, let's say, like a starting point, like a reference point somewhere in the middle, the oscillation would be, for on the example of a sine curve, would be just following some certain movements upwards and downwards and fluctuate around some neutral point, right? And if you think about it, every trend visible in the technical analysis chart is just simply doing the very same, right? And this is a very clear explanation behind it. There's a very clear reason behind it, because we consist of matter as people, and people create markets, right? People move the markets. People are just simply deciding upon the price and the future, just market behavior. So if we as people oscillate for our entire matter that we consist of, then it means that the markets that we create as people would oscillate too. Everything that we touch just simply oscillates, right? This is a very fair principle. Like I'm not quite sure if something like that been already mentioned or proven in books, but I will make sure to put it in my own book in the next year. This is a very logical way, I think, to perceive the fact that the market fluctuates, that the market points some repetitive formulas, right? And that every just simply chart that you would go and try to analyze would have some fluctuations that happen on every time frame, that happen on every period. And this is what we call the fractal nature of that, right? So all these bigger trends that you can see over here, right? All these uptrends and downtrends are visible for their secondary oscillations over there, right? Every kind of movement on the market cycle is just followed on the market cycle as well, but this is why it's called a cycle, right? A cycle, like for the sine curve, is simply the time, the period between the two peaks or the two troughs, okay, or the two crossing the neutral points, okay, and this is what we label as a t, or the capital T in physics as a period, as the time of a cycle, right? And if you go and dive even deeper in cycle theories and from finance and from technical analysis, when I was doing my CMT course the other day, there was a huge chunk of information about the market cycles and a few principles, right? Such as, for example, synchronicity or just harmonicity, that it's kind of like geometrically connected with each other, right? So there can be, like, if you're not familiar with, for example, Gantt theory, I'm personally not using that. I'm not the greatest fan of that. But all Gantt's theory is pretty much about the geometrics, finding the geometric formula in charts, and I think it just simply corresponds somehow up to the point with how we can profit from that. Okay, because still the only reason for us to watch the chart, apart from just performing some primitive lines over here and there, is just to make them money on that, right? I think everybody agrees. And to make a good money, you need to understand well what you're dealing with. And to understand well, you need to be very aware of the cyclicity of the market. Every market cycles. It just goes in cycles. So every pump will be followed by a dump, and every dump would be followed by a pump, unless, like, the asset is dead. Right? No, nothing will help to price to rise if there is no market, if there is no anybody to push the price, right? If there are no interest participants. So after we've accepted the main rule, I think, of and the main awareness point that the market is moving in cycles, then we can go and see how beautiful it looks and just points towards the marking out the tops and peaks over the Bitcoin history. I think you should be able to see all these peaks that are marked out. But at the same time, it means that every peak is followed by a bottom, and every bottom is followed by a peak, and hence makes the full cycle. So every bottom that you can spot over here, right, or over here in the form of some accumulation, perhaps like a shorter or longer, there was a dropping tendency before this very last drop here, just by the way, gauging on the unregistered Bitcoin price history. I definitely suggest you go and read some materials all online. Every bull and bear market, right, based on the Dow theory, because we mainly need to also understand, just before I continue on that, we need to also understand, apart from the fact that market is moving in cycles, we need to understand what the trend is. This is the key keyword, I think, in technical analysis. And trend is nothing else but than a directional movement. Every model, every movement would always have some deviations, right? So it's not always like a trend line to be 100% respected by some moving assets. There would always be some deviations, but the whole thing is that trend is not invalidated in full as a directional movement if the trend line is broken for a second and still manages to climb up and close above, right? I think this is also like a very holy grail of technical analysis, that nothing works 100% perfectly. Nothing works 100% perfectly in reality at all, because now, even if there is a model, some kind of a model, if you go and look for the definitions of what the model is, this is simply like a system of assumptions, like a system of estimations that are doomed to fail and never have 100% accuracy. So knowing all that every market is deviated, every movement is deviated, and every market moves in cycles, and every market performs and moves in trends based on the Dow theory and just simply our plain observations, then you can go and actually just spot some interesting conclusions over that. What I definitely like you to notice is, as I said, you can definitely tell that there is some repetitiveness, right? There is some repetition. There is some repetition over the time for Bitcoin, and every peak, right? If we go and count it up, we have seen 1, 2, 3 peaks so far, right? And we have seen 1, 2, 3, 4 bottoms, right? So it obviously is just getting very simple assumption already based on technical analysis theorems, right? Which one of them is that history repeats itself, right? But all we know for a fact, history doesn't repeat, but it often rhymes instead, right? So there are some similarities. It will never be the same. Again, I'm referring here to the nature of physics and Newton dynamics, for example. Nothing is ever the same any next second. And so the mistaken assumption is to perceive technical analysis as something that would just keep working forever. Okay, it can hint us about some potential movements and what to expect and what not, but definitely do not rely 100% on that, because this is still high chances of simply performing bad over using simple charts. And knowing all that, right? Knowing all that, all these theorems and actual practices, we can spot an easy way, right? That we have seen, like if we start over here, right? This would be, now let me actually just put another color, right? This is like our starting point. So here is a first point, okay? Here is the first peak. Here's the second dump, second bottom. Here's the second peak, right? Here's the third bottom and the third peak, etc. And all in all, we have seen 4 bottoms and 3 peaks. Okay, so if everything moves in cycles, then in technical analysis perspective, from this perspective, we could see and expect potential all-time highs from the very not sophisticated estimations, right? Just the pure logic. If you go and see, every peak is much more aggressive, it seems, than every bottom, okay? And this is pretty much like because market is pumped with capital. Okay, this is a huge, great aggression. This is a market euphoria stage for crypto and for any other market, and this is a very big aggression to realize any profits taken after riding all the rallies, right? While at the same time, it's interesting to see and to spot that bottoms of the market cycles tend to form and perform longer over the time, right? And the accumulation periods, as you can tell by this, right? The accumulation is pretty much, or AKA consolidation, is just like a time for the market to take a breath and change potentially the direction, okay? This is like a no trading time, like horizontal trends or consolidations, right? Or rectangle patterns. This is what we call as a no simply situation with no trend, okay? But all in all, we are having obviously three types of trends to be used in technical analysis. The upward trend, the upside trend, the downside trend, and the horizontal trend. And knowing all that, so the simplest Dow theory, based on the Dow theory, market cycle model, is that we are having the accumulation period, we are having some participation, we are having the distribution of profits, participation in the down rally, and another accumulation, right? And see how it well performs ideologically with the cyclicity of markets, just given as a sine curve, for example, right? And every accumulation period is simply taking more time to realize, right? This one was actually very, very sharp, V-type reversal, or even some kind of logarithmic, cap and handle, perhaps. But all in all, markets take time to recover, because here at the very opposite edge of the euphoria, what we have is a depression, okay? What we have is a depression, and when market is depressed, it means people are fucking depressed, and nobody's even interested in charting. Nobody can even watch the chart anymore because they are so fed up with that. They just won't take it anymore, right? They lost all their profits for the risk aversion, for not being able to, for the loss aversion, not being able to admit the loss to themselves. So they lost all the money here. They're very depressed. Nobody's interested. Bitcoin's dead, bro. Bitcoin's dead. It's just going, it's just going south, right? And this is the time for the big money to accumulate. And this is what we perform to see as a horizontal trend, especially after bear markets, okay? So this is where big wise money come up to chime in with the market. Yeah, so what we definitely need to notice in the very chart is that based on these Dow theory, Dow's theorems and other technical analysis principles, every market cycle, right, starts at the total fear and depression. It just follows the participation, and everybody, when they see, that the market is living without them, right? They think like, oh shit, I really need to get in. I really need to get in on that train, okay? Otherwise, they just leave without me. So people are freaking losing their minds when they are missing out the opportunities. That's where the fear of FOMO comes. That's where the fear of missing out phenomenon comes, right? And after that, the big money would just want to one day, perhaps, realize the profit, right? Because still, what I keep repeating, unrealized profit is no profit. And it follows up with a huge and aggressive sell-off and the peak of euphoria when everybody's getting rich and their grandma's dogs, goldfish. And this is the time that you go and realize your profits, right? And hence the big price drop comes, right? And again, there is another opportunity to accumulate. There is another opportunity to accumulate, definitely. If you can go and watch this part, every bear market is followed by an accumulation, right? You're having accumulation here, you're having an accumulation either here very short term, right, in this form of this a V-shape type of reversal, right? Or we just can qualify that as well as a form of large large, kind of like an ascending triangle, but on the linear chart, it will not obviously be the ascending triangle itself, right? But all in all, what counts is that there is a period that people would just accumulate the orders, right? They would just accumulate because they can see that this asset is undervalued at that given point. And again, when this breaks out of above some key levels, it just follows for the participation, right? And the full cycle closes at the very same peak, right? Just higher at the all-time high in this very case. And again, bear market, accumulation, participation, all-time high, right? And again, bear market, accumulation, participation, but this is like a minor part, minor bear market, right? And what we can expect, just based on what I already said, is we are missing the fourth peak. We are having 4 bottoms, but 3 peaks, right? And every bottom so far was followed by an all-time high. So technical analysis would say that we should expect a new all-time high in this very case. And so the question is how it is possible to even project if it's, if it can come or not, right? And what I think, knowing that this is an emerging market, you can definitely tell that the interest over the time is just simply growing. It's not curving down, right? It just goes up, followed by some, by some very aggressive growth trend line. Okay, this obviously should be ideally smooth in here, but it's not. And the same goes for the actual opposite edge of the resistances. Okay, that there is. So the logical extension of that, like some extrapolation, would be to expect some potential all-time highs after we break off this potential reaccumulation phase that was just to be spotted, for example, right here, right? Or after every breakout here of the accumulation phase, there is like a reaccumulation period, right? Here, for example. There is like a reaccumulation period as well, right? Or here. And what I consider this to be is just simply breakout of accumulation up to this point, up to 14K. Here, the reaccumulation, long-term wedge or descending channel, whatever, it doesn't even count. And we've just seen, for on the long-term perspective, the breakout of the long-term, of the 6-month plus reaccumulation period. And this just tells me that we could expect upside continuation, right? Especially that every halving brings new all-time high historically as well, and the timing is just around the corner, right? It's just coming in 2-3 months from now. So all in all the technicals, like from the very fresh view, are set bullish for Bitcoin long term.
Birb, I've got a question. I'm going to try and articulate it in the simplest terms I possibly can. You spoke earlier about the movement of particles and sine waves and the restrictions of the movement of particles. Basically, from my basic understanding of Newtonian dynamics in regards to trading, particles are restricted by constraints of degrees of freedom. So my question to you is, obviously, looking at this logarithmic chart, you can see that there's quite an obvious curve to the Bitcoin chart. I guess my question to you is, based on the principles of Newtonian dynamics, the particles, in movement, and obviously that has been applied in rare cases to trading, only have a certain restriction of movement, and in this curve we only have this certain. You can see the parameters that the chart's trapped within. So, Bitcoin being a deflationary asset, could it be argued that at some point we would break from this logarithmic curve to create obviously like larger highs? To almost break upwards from this current curve trend that we have?
Yeah, sure. So I think that what we need to understand, like from the very basic point of view, is how it would, if we are asking, like if the question regards the actual value that Bitcoin can get, or the actual representation in the logarithmic chart, because as you can tell, but just watching the right side for the scale, right? The greater the levels are, the point of the logarithmic scale is that is just there is the same length, the same size, let's say, of the boxes or of the distances on the scale, are taken by greater and greater and greater and greater values, right, on the scale. So all in all, in this very chart, it could even go like, extremely super crazy, and like for the Bitcoin price, it could go extremely super crazy and still look as somewhat flat, okay, because it would trade so high, simply that the values would be so squeezed that on a logarithmic chart, it would not really look like it would just look like it stopped trending, okay? But in fact, what you would see on the linear chart, it would just still keep rallying, okay? And so this is definitely with regard to the applying, some trend lines on logarithmic charts. So we need to be very aware for how it works for the nature of logarithmic function or logarithmic simply scales, right? And with regard to the perhaps more econometrics of the Bitcoin, well, I think there's always a question for what the value is, what we consider to be the value, what we consider to be valuable, that makes people desire, right? That makes people desire what they really want to have or achieve or own. And as much, if you're asking me if Bitcoin is going to become a global currency, then I would probably need to be very aware and honestly pessimistic about it. But that comes not from the fact that I don't consider that to be breakthrough moment in civilization history, but I think there are like too many varieties in the world. There are too many differences between all the nations and all the countries and all the just roots that we all have. That this is simply not possible to put everybody, like 7 billion plus people, in one box. Okay, it's impossible. And this is much, you can create many different models, like economic models, on how to govern such matter from the economic point of view, for example. But I don't think it will just go millions for Bitcoin, right? I don't think Bitcoin would be worth millions. So and remembering that it just costs, the greater it grows in price, the more flat it will look technically on the logarithmic chart. I don't really think we could spot that breakout. So this breakthrough for the logarithmic curve, logarithmic trend line, right? Somewhere over there. This would probably push it Bitcoin like up to the limits of millions dollars. And like, as much as I like Bitcoin, as much as I like being a trader for Bitcoin, I also vote for being very reasonable and rational in that. And I don't think there is a reason for people to just encapsulate so much value and, as we call it, into magical money, right?
Right on. And there's some great points there, Adrian. So Kyle, I'd love to bring you in on this, specific to Bitcoin, but also pertaining to any other asset chart and your personal trading style. There are a lot of different, charting styles and different weights associated with prominence for what people are looking for, depending on their own kind of personal trading strategy. When you're looking at a fresh chart, say for instance, the chart on the screen right now is just naked candles. What are the main things that you look for when you first are kind of appreciating an assets chart and kind of how you identify the tradability of it and as it pertains to your personal strategy?
Well, yeah, look, like using the chart that we have right now pulled up, I would look for patterns, basically. As Birb was saying, we've had 4 dips and 3 peaks. So, logic would dictate that we're due for another peak before we have another prolonged dip. So something like that. But normally I utilize many other factors than just looking for what amounts to fractals. I'll use volume, price action, many other factors, that goes into trying to determine where a asset's price may be headed, so I can enter the most effective trade.
Right on. And as far as Bitcoin price action goes, with what we're looking at there, for your own personal kind of trading philosophy, and especially on some of the smaller cap projects that you may trade on various exchanges, for projecting, targets, in price discovery, do you primarily rely on fib extensions, or do you look at another kind of a theoretical device to try to capture the peak of a breakout?
I do like fib extensions, but not in the traditional sense, as in I kind of use them to front run everybody as I can, because I know, that's some of the detractors of TA will say, "Oh, it's a self-fulfilling prophecy. Just because enough people do the exact same thing, then that's why it happens." Well, yeah, no shit, that's why it happens. So then what's going to happen. Duh, you know what I mean? So
100% correct. That's perfect answer.
I won't follow the fib extensions directly, but I'll be around them so that I can, more easily ensure that a trade will hit one way or the other. And other than that, just looking at the current price action, and then just setting a small, because if it's a intraday scalp that I'm trying to do or something, I'm obviously going to be looking at low time frame, 15-minute chart, hour chart, 15-minute chart if you're really degen, but hour chart at least. Then I'll be happy with 10% profit. Something small, just compound, because if you're doing 10% 5, 6, 7 times a day, well then that's actually quite a bit. And then also you're compounding as well, because after each trade you have 10% more than you did previously. So if you're also moving up your position size by 10% each time, you're compounding your gains massively throughout a day. Now, that is extremely risky also to, be day trading that much. But I'm just saying, for example,
Absolutely. And a follow-up to that, please take my money.
Yeah, right. So,
Yeah.
I mean, it really just depends on what I'm trying to do. Fib extensions are useful for longer term stuff, but I'll just go with very small traditional profit margins for short time frame scalps.
Absolutely. And I think that's much more a much more responsible practice that I'm sure most of our listeners adhere to. Birb, coming back to you for a moment, with this Bitcoin chart in particular, I know that this is on the weekly time frame, but if we could zoom into a daily or a shorter time frame, I know that a lot of our listeners are in high anticipation of what some of the activity might look like for the rest of the calendar year. And obviously not asking for anybody to give hard and fast predictions here, as that would be the folly for fools. But I would love to hear some of your thoughts based on what you're seeing on the chart.
Yeah, most certainly. So as much as I am a big fan of watching high time frame charts, I definitely think this is a huge importance to know and spot and discuss and coach about short-term movements, right? At least it's definitely needed to use at least like when you, for example, want to scale in or scale out of your position, right? You cannot really scale in or scale out at certain specific levels watching all the entire year to date, all the history to date chart. And for this reason, I definitely enjoy launching the daily charts, the weekly charts. And the way I see that and the way I use my charts is simply I choose 3 charts to rely on, mainly. One of them is a high time frame chart, medium time frame, and low time frame. And I watch all of these 3 classes of charts. And I most usually, depending on what type of moves I want to do or perform, I'm watching either weekly, 12 hours, and 4 hours, if I want to perform mid time frame swings, or if I want to perform higher frequency swings or lower time frame swings simply, yes, I decide to go and take it from 12 hours, right, through 4 hours to 1. And this way, I'm able to watch the global context, the local context of a market, and the potential zone to scale in or scale out, right? So this way, I am narrowing down the time frames in order to actually know about specific entries or exit points. And as you can even spot out here in this very section for the indicator, this is called Birbicator, and this is free. You can go and check it on the TV on the Trading View. It's free, and it includes momentum ribbon. It includes stochastic, stochastic oscillator, which is the momentum oscillator, and it just shows you the pace of a trend, right? And potential when the momentum just kind of like slopes down. It simply means that uptrend is just finishing, right? Because it's losing the steam. That's how we need to interpret that. And when the momentum is increasing, you need to interpret it in the way that the market is gaining the steam, okay? And knowing all that, and you don't even need the histogram. I mean, the histogram here is taken and derived slightly from Ichimoku strategy because it represents the momentum, the distance between the momentum line of Tenkan and Kijun, which are one of the basic factors for to be used within the Ichimoku strategy. When these two align, when the histogram aligns color-wise and trend-wise, upside or downside, it just simply points additionally whether the trend is strong in power or not, right? So for example, the strongest uptrend is when there is an orange upsloping momentum for the stochastic, and at the same time histogram is just following up the same way, right? Whenever we spot the situation that there is a histogram growing, but for example, in this point, as you could tell, now there is a histogram actually just dropping. It means that the trend is losing the pace, right? It's just losing additionally, confirmed by a different other indicator that has just lost its pace. And this is, like, if you want to go and use the Birbicator, this is definitely a good point to read that. And what we need to be aware with that and how we can interpret. There is often like I believe, unwritten rule, okay, for all the oscillators, for all the momentum oscillators, that here from the overbought area to the oversold area, these are the most important parts that you need to watch. And there is like a principle, not probably written anywhere in the books, but like a common practice or common tendency that whenever the market drops out and starts trending downwards from the overbought area, it's doomed to reach the opposite edge, right? So this is point that we need to mention also, that we could expect this ribbon, this momentum to follow up and see itself within the oversold area, right? When the market is temporarily trend-wise and momentum-wise oversold and undervalued. And see how nicely it corresponds with all my Twitter projections so far, right? Because one thing is just saying, the accumulation pair here, right? Which I managed to happily call the other day for it being the actual bottom. Fun fact, I was doing that live on stage on Keynote in Vegas. I was talking about it. That's kind of like hilarious, but yeah, that's true, right? And you can spot two key trends, and to spot them, like I also put in my pinned thread on the Twitter, this fun principle that I'm watching, right? And fun principle is nothing else than just 3 sets of high time frame, mid time frame, low time frame trends, okay, And obviously, the lower the time frame is, the more steeper it gets, right? And this way you're able to project that price tends to follow the steepest path at times. Then it breaks down because this is not sustainable of longer period. It finds the support, okay? It just later bases and relies and moves towards the progressive support of mid time frame trend. And when this one is broken and it just follows the full retracement, it just relies and fully backs up on the high time frame part, which is the very case here, right? Which is the exact case over here. And so we can tell and spot the actual long-term trend line. You can go and see actual mid-time frame trend line. Okay, not to mention some short time frame trend line that's already been broken and retested successfully that I also was talking about on Twitter. Now we are just trending below this trend line, confirming and validating confirming by close the local, fact that we simply broke down and closed below the trend line, right? So we could expect based on that another series of potential breakdown retest and just come back to the very area over here. If we go like just closing up on that and diving into support resistance levels, this is like a fun principle because I use it myself very, very much a lot. Let's just clear that out for a second. And if you go and want to dive in for some specific levels, firstly, cannot ignore this trend lines that I just spotted, okay? On top of that, I am relying mainly on pre-breakout and pre-breakdown levels. And I think this is very important because if you're having like a period of consolidation, right, after, for example, some downtrend, and if you're seeing some support being held, some period of ranging or rectangle, and it just breaks down with one move, okay, then it means that the move, this big thrust that just happened, so the candle before that, or the bar before that, had to be of super significance from technical point of view that once lost the support, it just resulted in huge sell-off, okay? And based on polarity change principle, we could expect that broken support turns into resistance, right? So we could expect potential retest and come back to this area sooner or later and see what just happened, right? See what happened over here. See how perfectly it just rounds up with all the pre-breakdown levels. Like here, this pre-breakdown level was of super significance because we didn't see the close through this level, okay, previously. So closing this uptrend above this trend line is of huge technical importance as well because it proves that market is stronger than in this point, is more certain than in this point, is more healthy and ready to go higher. And I'm taking it. So another pre-breakout levels before the big thrusts is simply how to spot them. You need to realize to spot the big thrusts, okay? Big candles like that. Big candle like where's that? Like this one, right? The more you spot of these, the greater your chances that you spot some significant level. Again, so pre-breakout level, right? The level right before the big thrust to be broken was this one. And see how perfectly it just later retested as a support, okay? Another point over here. And we have a support of clusters, cluster of supports, which is the demand zone. On top of that, every resistance that has to be broken serves as a support later for polarity change. And again, right, another pre-breakout level over here over this bigger thrusts. One is the short-term interest, and second is the demand zone. And second is the mid-time frame demand zone. And if you go and spot how well it corresponds with the trend line principles, okay, that I just brought, then you are able to tell that this is what we are truly looking for, okay? This is maybe not 8K, but within this area, as you can spot, this area over here is what we need to consider to be, huge technical confluence between the diagonal progressive support, the zone of demand, right? Zone trapped between the demands, which itself serves as the demand too. And all in all, we could expect some potential correction like that, right? We just saw the breakdown. It's just tapping short-term demand, so we could expect the pullback over here if it fails, obviously, because everything in technical analysis and trading is conditional, right? If it fails, then we could expect the continuation of the retracement and actually just following up regular ABC or regular ABC long-term or mid-term ABC of Elliott, right? To just continue the rally later towards the new all-time high. And this is still my take. I expect this area to be tapped in demand and just simply be followed by a stronger impulse and or actual correction, and following the local downtrend for reloading the demand around 9K. Entire zone from 8.4 to 9K is a big buy for me, and that's what I would definitely leave you with right now.
Right on. Yeah, I'm setting my buy orders right now, Birb. No, I do appreciate that analysis, and I tend to agree with you. I think there's a great cause for retesting that 8.4 area, and I'll be reload there personally. And would expect a pretty strong reaction from those levels as well. Right on, guys. Well, you have given our listeners and viewers a true tour de force here with this TA breakdown. I'd love to give our co-hosts and guests an opportunity to kind of wrap things up, and as we are known to do, leave with final thoughts for TA and BTC in general. SoCal, would you like to lead us off for anything you'd like to leave our listeners thinking about?
Well, to just kind of touch on everything that we've gone over, it does seem that there is an overall bullish trend occurring, and long term, obviously. I'm not going to put any numbers, targets, or anything like that out there. But as Birb covered earlier with the whole dips and peaks and on the logarithmic chart and everything, it's fairly obvious what should logically occur next. Doesn't necessarily mean that the market is going to behave logically. It's, in fact, famous for irrationality. So stay safe, practice proper risk management, and don't over leverage yourself, and never go all in on a single trade.
Amen. That's in the 10 Commandments. Adrian, what about you? Anything to leave our listeners with?
Yeah, 100%. Just to keep it short, follow us all on Twitter and we will be all good.
There you go. And wrapping things up, Sponge, what do you have for our listeners?
I think just play the long game, really. This market's not going anywhere. I think you've got plenty of time. Just, if you're new to this, then just try and accumulate at good areas. Look logically at the weekly chart and, just be mature about it. Don't just go all in 100 times like right now, for example, probably a pretty shit area to just fucking leverage yourself out of the equation.
The advice that I'm not going to say advice because it sounds like I'm giving financial advice, but what I would suggest to people that are not experienced traders or whatever is to you could take just $20 out of each paycheck and just buy $20 worth of Bitcoin every paycheck. You don't have to follow any charts. Don't worry about leverage or anything like that. Just buy $20 worth of Bitcoin every paycheck.
Yeah, I completely agree on the dollar cost averaging in. That was going to be my final thought as well. You can almost look at it like an index buy for establishing a position. It just indexes it over time instead of over different assets. So I would say that that's a really smart tip for anybody looking to enter the market. I think that people would be remiss not to look at other legacy markets, for a little bit of perspective in terms of where crypto is and where it's going as it takes its place alongside other, much more developed asset classes. There is going to be a great deal of volatility, but look at capital flows and uncertainty in larger markets, and understand that what we're seeing with Bitcoin is entirely unique, but it very much has a place at the table. So don't get shaken off the ride. And that does it for me, guys. I want to thank you so much for being here. Sokel, you've been exceedingly generous with your time today. Thank you so much, man.
Yeah, no problems.
Adrian, thank you so much for being here. You're a true trooper, and we appreciate you.
Thank you. It was a pleasure as always, and I want to thank you.
And finally, Sponge. Sponge, you've done a great job today, man. Really appreciate you, and thanks so much for sharing your insights.
No problem, man. Very same to you.
Yeah, and on top of that, I would almost forget. I don't know if you remember, but there was like a huge promotion, a huge discount giveaway for the Birb Nest exclusive subscription programs, and there were like 3 giveaways for that, okay, including hoodies, including the free packages I said, right? And as I promised, I would like to go and randomly pick one person that just followed all these steps, liked, retweeted, etc. for the giveaways, right? So let's see and give it a look. So let me copy paste the link and use the random picker. Okay, I'm marking that I'm not a fucking robot. Who knows? And click and pick a winner. Okay, and let's see. JSCN dot set done. Let's see this very tweet. Okay, and okay, this is given, and this person wins as promised one package for free, one package of monthly exclusive Nest Club, our top best-selling program, most popular subscription program, and I will be more than happy to welcome you, brother, officially.
I'd like to thank our listeners for joining this episode of The Nest Show. We invite you to connect with our guest on Twitter, where SoCal can be reached at SoCal_crypto. SoCal's CoinHQ is at CoinHQ_. Birb is at CryptoBirb. Sponge is at SpongeCoinBob. And I am at BenjaminT1717. If you've appreciated the depth and breadth of what you've heard with us today, subscribe to our podcast and find our landing page at thebirbnest.com. We have a vibrant Discord community which acts as our central hub of operations, and we welcome you to join us by visiting thebirbnest.com/discord. We also offer an extensive free bulletin on emerging crypto market trends, exclusive undervalued gem reports, and in-depth expert technical and fundamental analysis at thebirbnest.com/bulletin. We always appreciate engagement from our community, which of course means liking the video and subscribing to our page, where we insist on bringing you the highest quality content available. Also, we're happy to incorporate tips and topics from our listeners and encourage you to email us at thenestshow@thebirbnest.com. After much demand, we are excited to finally introduce a host of delicious merch. Starting with my favorite, an assortment of comfortable hoodies. You can now sport your Birb Nest pride in style with our branded goodies. Be sure to visit thebirbnest.com/merch for more info. And don't forget to check out @CryptoBirb on Twitter for ongoing merch giveaways and more ways to participate with our community. This podcast has been brought to you by the Birb Nest. Thank you, and trade on.